Hey guys, thank you again for joining my channel. So for today I wanted to quickly discuss type of mortgages, right? So the most discussed subject that we find online is what should you go for? Is it the 15-year or the 30-year mortgage? Most people tend to go for the 30-year mortgage, and myself, I kind of lean into that one. But I wanted to discuss the pros and cons for both of these and let you guys decide which one is more suitable for you. So, really quickly, we'll throw some numbers at you just to make life a bit easier to understand these examples. So, borrowing 300,000 pounds, and we'll compare it for 15 and 30 years. So for 15 years you would have a 3.24 interest rate, and for 30 years you would have somewhere around 3.95 interest rate. For the 15 year you would end up paying monthly £2,100. For the 30 year you'd be paying around £1,300. And at the end of let's say the payments, for the 15-year one you would be paying somewhere around £378,000, and for the 30-year one, apologies, you'd pay £468,000. And at the first, I guess, instance, everybody would think, why would you go for the 30-year one when the 15, definitely you'll end up paying a lot less. So let's go first with the 15-year one. Let's do a pros and cons list. So the first pro is you finish early. That's no explanation, I think, needed on that one. Another pro is you will end up paying again less money to the bank. So you can see in the example, at the end of the 15-year mark, you'd be paying for a 300,000 loan, £378,000, much less than the £468,000 for the 30-year one. The first option is you get equity a lot faster in the property. So the faster you make the payments, the more you get equity in the house, and normally it's a lower interest rate. But to be fair, around 0.5% is not that much, to be fair. The cons, quite obvious. The monthly payments are higher. You would have a higher risk. So, to be fair, 2,100 is quite a lot of money for a monthly repayment. So, God forbid, if you guys lose your job or anything like that, it would be quite hard to make the payments. And the last con would be less cash flow. So, this would be a bit of a different topic, but let's say you want to buy this property to rent it out. I would never suggest going for a 15-year mortgage, because cash flow means how much money you could roll. So if you have a lower payment, then the money you're getting, you could use it for deposit for a next property or for another investment. Because at the end of the day, if you get the property to rent it out, you want to make a profit. So if you're having a monthly repayment of 2,100, maybe you rent it out for, let's say, 2,200, you could only profit a month of £100. And if the market goes a bit lower, then you end up not in a great position. If you have a lower mortgage payment per month, if the market drops a bit if the rental market drops a bit lower, you have that space of probably, we said 2,200 it's renting, and 1,300 it's your mortgage repayment. You have a lot more bigger buffer to decrease your rent to make sure you have somebody in the property. So that will be it for the 15-year one. For the 30-year one, first of all, it's easier to get. A 30-year mortgage is 100 times easier to get than a 15-year mortgage, because the bank has to take into account how much money you make per month, what you're spending, and they have to calculate, well, you have 2100 here, can you make this payment? Probably not. Maybe the bank thinks it's too much of a risk for them to take versus the 1300 that the 30-year one gives you. It's a lot safer, right? So who knows, maybe something happens, we lose our job, our spouse loses our job, some emergency payment happens, right? 1300, it's a lot easier to survive. Again, with 1300, if something happens, you lose your job, you could start thinking about renting 1 or 2 rooms of your home, and you could kind of cover it in that way. It's flexible, right? So you could go on a 30-year mortgage, but nobody's stopping you to make overpayments or overpayments. So that doesn't mean you have to, if you get a 30-year mortgage, doesn't mean you can't finish it early. So it gives you that flexibility. If you want to finish it early, you could do overpayments, you could, I don't know, renegotiate after 2, 5, 10 years, depending on the type of mortgage. Again, we previously discussed on cash flow. So if you're going to make this mortgage as an investment into a property you want to rent, again, cash flow is king. You should always try to borrow as much money for as longer period as you can, because you make that money work for you. So again, that would be my opinion. You definitely need cash flow if this is an investment, right? You could, if you think about it, right, between 2100 and 1300, it's 800 quid, right? For 3 years, that 800 quid becomes 28,800, and in 5 years it becomes 48,000, right? That's another deposit for another property. Again, another benefit for the 30-year one is inflation, right? As you guys know, if you borrow £1 today, right, that doesn't mean in 30 years that £1 has the same value. So the easiest way to think about inflation is how much does a bread cost today, right? If a bread today costs 50p, right? So with £1 you could buy 2 breads. In 30 years, maybe with that £1 you could only buy 1 bread, right? So that's inflation. Means the value of your money decreases with time. So borrowing £300,000 today means that in the future, those £300,000 won't have the same value. So that means if you get the money now and pay it back later, you would be in a good position, taking into account inflation is always rising yearly by year. And that would be it for the pros. The cons, it's quite obvious. You end up paying a lot more to the bank, so at the end it's I think £468,000 versus the other one that's £378,000. And if I would, and also you need to understand what type of person you are, to be fair. So I would always suggest going for the 30-year one because, as I said, lower risk, it's a lot flexible, your positive cash flow, inflation is your friend. But if you're really bad with money, and the difference in the in cost between 2100 and 1300, you spend it on stuff you don't really need, and you end up getting expensive vacations that you don't really need, or just spending on stuff, and you know you're really bad with money. Might as well go for the 15-year one, make the higher payments, and and at least it gives you a bit more discipline with your money. I think that will be it for this subject, guys. Thank you again for listening. Again, this is only my opinion. It depends also on everybody's situation, if they want to finish a bit early. Again, if you're probably a person that wants to invest in real estate, then probably the 30-year one, again with the cash flow, is really good for you. If you're not sure about your future job, again, the flexibility and the lower payment per month might be good for you. But then again, if you are probably a family person, or you want to start a family in the future, and you're not really into investing, you just want a stable job, a stable home, probably the 15-year mortgage is the right one for you. Because if you go aggressive now, probably when you have a kid 5 years, 6 years down the line, you're probably 9 years to go, so you could finish the mortgage payment by the time your kid gets to 8, 9 year old. Because probably later in life with teenagers, university, college, bigger payments, but you will have the stability and the extra money because you finish your mortgage a lot sooner. But again, it's case by case scenario. Hope this helped you guys, hope this informed you, and have a great day, and hope to hear from you guys in the comments section, whatever you choose, or maybe I'm wrong on some topics and you could educate even myself. Take care, guys. Have a nice day.